Hello, fellow accounting students and professor. My name is JT Tonge, and I'm here to present my case 2-3 titled The Tax Return to all of you. After you hit the first slide that contains the YouTube link, we have our situation, which in a few ways basically is a tax preparer by the name of Brenda. She has a tax return that does have some gambling winnings and losses. And after submitting the return to her supervisor, Vincent, Mr. Kuhn, who is the client, does not want the gambling winnings reported on the return, and Vincent is pushing Brenda to do so. However, Brenda is in a situation where she needs to either side with the client and Vincent, or she needs to side with what might be the right thing to do in regards to making sure that all income is being reported. The next slide, we have the judgment issue, which is question 1 for Kohlberg. Vincent is trying to see if Brenda is a stage 1 to make sure that she is able to and willing to listen to her supervisors, to just do what she's told, which can lead to some poor ethical choices because she's willing to do what basically get her hands dirty, but do what is needed to get the job done. So he's just kind of testing the waters in that regard. But Brenda should operate at a stage 4, which is law and order, because federal law and tax code does require that all income should be reported. This does include gambling winnings, and she does show traces of stages 5 and 6, which are social contract and universal ethical principles, respectively. She does have an obligation to meet the standards of the IRS regulations and the standard of being potentially a future CPA or enrolled agent if that's her choice. But the rules that are implied by federal law and the tax code should be lived by all tax preparers and technically every citizen. But there are some rules that are up for interpretation. However, income is one of those items that should be followed through all the way, because it's pretty black and white. To continue, though, these items should make a difference on Brenda's choice, which include risk for Brenda's personal and professional life, Vincent, which does include his personal and professional life as well, the firm, which would also include the future of clients and the business itself, and then the client itself because he's wanting to commit tax evasion, which is a federal offense. There's also the mom rule that would make the difference, that Brenda could consider in regards to making sure that if mom or the IRS in this case, and if an IRS agent were present, would Brenda and Vincent or even the client say the same things about excluding the tax winnings. Then there are also the consequences in regards to certification. There's jail time, and then there are fines. But a lot of these situations still conclude that stage 4 should be Brenda's situation of choice, since a lot of these are laws and regulations. In regards to question 2, her counteract in defense, if she were to confront Vincent, the supervisor, would be stating her comfort level in not reporting the income, the winnings, and then also discuss with him the federal law aspects of just because it's income doesn't mean it's tax free. And then there's also the mom rule. In defense of her choices, or what she could go with is having a clear conscience, and she may not even have any gain at all or a temporary one at that, which may not even be worth it. And she could also discuss with him the small and first things, which, judging by the case study, she probably is in a new entry-level tax preparer position. So this small, simple thing, which would be her first, can lead to some great outcomes in regards to Vincent's choice of trying to test the waters. However, on next year's return, in regards to question 3, Brenda would have to consider and may be able to bring up, if she were to fight the tax return next year, would be to bring up that it was a one-time issue. And then there There might even be revenue only, which would then have to be reported by law. There are also other considerations such as IRS complications, and then there's future dishonest clients or even ethics of the company. This even includes the CPA as an example in Heber, Utah, where he did potentially do some of those small and first things, and it led to 6 clients filing fraudulent returns totaling about $83 million in tax refunds, which then led to the CPA paying out $250,000 in fines and about up to 90 years in prison. And as such, Brenda should still stage with side 4 and not do that first and small thing to sway her future career as a tax preparer. And the last slide are my references if you want to check them out. Thank you.